comment, please. So, sorry guys, I quickly have to eat. I've not really eaten anything serious this morning. So, as I was saying, this is very, very simple to use. Like, don't feel like it is hard. Now, we have talked about the facts, and we have talked about the confluence, right? We've talked about all these things. So we've talked about facts. So now, that's why I used to emphasize that our fact is very, very, very important, because every single thing, our VR, what's this? Our VR, our whatsoever, or whatever we want to call it, every single thing is the foundation, right? So you have your VR strategy right now. Now you have your inducement, remember. So now, what I just have to do in this scenario is simple. I just want to check. Okay, let's say I'm thinking, come on, should I set limits right here? So apart from the fact that this is a VR, what other confluence can I find that can make me trust this setup? That is the work of confluence. So it's either you look at your session, so probably this is a previous session I, and this guy sweep previous session I, then that makes sense, because okay, now that will show that this point is really, really strong. So you took out the previous session I, then you violated this demand. That is a story. Then this one took out of this liquidity, creating a VR for us. So, or you didn't see a previous session high, but you could see that there's a divergence from this point to this point. So that I'll tell you that, okay, this point is actually strong. So now, you now need your final piece to ask that, okay, should I wait for a confirmation, or should I just enter this trade? So now, as soon as market take out this inducement, remember, emphasis on inducement. All I just have to do, plot my divergence line and check. If I could see that this is what my divergence is showing me, then I know that this is low, lower low, and this is higher high, or whatever you want to call it. This is the divergence, so it makes me trust this setup more. Because now, what this means is, this one show like it is a break of structure, but the oscillator is showing us that they are still focusing on the bearish market. So which means whatever happened here is just a stop hunt. I don't know if that makes sense. That's the purpose. So if your price action is like this, and your divergence is like this, what does that mean? It means this guy acted like there's a break of structure here, whereas all what the market is doing, let me redraw this. If all this is this, stopping here, it stopped here, and all this is what your divergence is showing you. This is stopped here. That simply means this market just wants to continue his sell order flow, while this is a true stop hunt. So this process can make me initiate a early sell from here, and can also make me trust this protected point, because it's not just a protected point, it is also a divergence protected point. The more the confluence, the more you are going to trust the setup. One confluence, low probability. Two confluence, more higher probability. Three confluence, like that, like that, like that. That is how divergence works. So you don't have to rack your head. You just use it as an investigation tool. A trade that you're already looking at, but you are like, oh, should I wait for confirmation? Should I pick this trade directly? You can use confluence as an extra guide for you. Let's forget about divergence now. Look at other confluence now. This is Asian session. And this point, what? Swept Asian high. Then What happened after one market sweep and Asia high and it tap into your supply? You start to fucking sell. So you can see how the confluence is adding up. This is a divergence high. This high also took out Asian session and broke multiple structures. So that is what I call storyline. So the story tell me here that, okay, as soon as I get here, it starts to sell up and it broke internal structure. I know that I will not come again. I just wanted to just pull back a little bit. I don't need it to get to this extreme area because I know that all I just want the market to do is to take out this external liquidity. And I'll just put my entry there. If it's like go inside, I will know that I will still catch the trade, but I will not be putting it here, which is what most of you guys will have done. Because when market is actually trending, it hardly go to the extreme. It just take out of the inducement and continue. If it is a trending market, remember, a trending market always have less pullback. So why would you say you want to follow the trend, but you are waiting for the extreme mitigation? But you forget that a trending market used to pull back less. So the pulling back that they are pulling back is just to take small internal liquidity not to come to your extreme point of interest. That is another giveaway for you guys. Because most of you will have been thinking that, why is Akindamola not focusing on here? Why will I focus on it? I remember again, time frame. The time frame I look at when I was picking this guy, there was no single fair value guy. There was no single week there. It was just a clean week. This is the time frame I was looking at, 15 minutes. And you can see, it was just a week. I just put my entry above it, and I cover what I need to cover. And what do I need to cover? This whole what? Doji candle. Then that's it. That's just it. So this particular one now that I'm looking at for here now, the only thing that I will stop this trade is that I cannot enter trade by this time of the day. So all I just have to wait for is very, very simple. So which means we are already in Asia. Asia is already cooking, right? So once Asia cook finish, let's say they just do this, and Asia can't clear this high break structure, then I know that my London, I will be fucking bearish all through, back to back. So all I just have to do now is, timing is not in my favor. I just have to wait for Asia to cook. Once Asia is done cooking, London session will be very, very clear. Once Asia is done cooking, London session is going to be very, very clear. So confluence, remember again, is what? A tool that you use to validate your facts. So, but for this divergence, you would have to spot your inducement first before you can look for the divergence. You cannot have the tool on the time. I don't even have the divergence tool here again. It has removed again. Okay, it's there. You can't be having the tool on all the time. For what reason? It is only when, let's go to another pair. It is only when you are looking to trade a point, that is when you work with it. Look at this guy. What did this one did? Higher eyes. What did this one do? The same thing. Did the market sell afterwards? No. But GBP USD, it gave us a divergence. I think this have explained everything to you guys completely. You can see this one creates a higher high, this one creates a higher low. What did the market do? It sell off. But Euro USD, it was just still flying up because there's nothing like divergence anywhere. Okay? There's nothing like divergence with any fucking way. So if you call somewhere an inducement point, all you just have to do, if you want to investigate it, is to what? Divergence. Like now, this point is a very nice supply right here. But what do we have? We have a what? This. But here, we have what? This. We have this. So that is to tell you that any mitigations that you are looking for around all this place is most likely to play out because this has shown us that there is a divergence in price. So this has shown that there was a hunt right here, even though it was not visible here. The only thing that you could see is you will be like, this is a liquidity, but you feel like this is not a B leg. It did not do this, did not do that. But the divergence has gave me that this point is strong enough to start selling, 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 selling. That is the work of divergence. So divergence helps you to anticipate an early reversal, because as soon as they have grabbed this guy and you, but remember, you must be able to spot a liquidity before you can spot a divergence. You cannot skip it. You must be able to spot a valid liquidity before you can spot a right divergence. Because once you spot your valid a liquidity, even without any tools, your divergence is just an extra tool to boost your confidence. And for it to tell you that you don't need to wait for too much confirmation to jump in on this trip, because I have already spotted a what? A divergence. Guys, am I clear? Like I said, this is going to be straight and direct. So guys, am I clear? I don't need to go one more time. All you just have to do is to go back to the records and try to understand it. It is not as hard as you think. Just go back to the records and also implement it. But remember, you must be able to identify a valid what? A valid inducement liquidity before you can actually identify the divert of it. Okay, so I would want you guys to backtest this and share it to yourself in the group so that other people can master it. But remember, this is confluence. Your fact is your what? Is your foundation. Your confluence is what boosts your confidence in that trade. Okay? So that is that about that. So thank you very much. God bless you all.